Welcome back, everybody, to We Are TPM with myself, Kyle Shara, sitting next to John Shara as normal. And today we have our guest, Shanda Pigg with Service First Mortgage. Thank you for coming in, Shanda.
Thank you for having me.
Of course. If you guys have any questions about anything we discussed today, give us a call, 817-818-9039. Shoot us an email at showmethemoney@wearetpm.com. We are here to discuss with Shanda. She is with Service First Mortgage, but she is also a rental property investor, and we'd like to ask you about your investor journey.
Okay.
First, we probably ought to point out that you're not on camera, and you're not on camera for a reason, and it's because you've been sick, and we don't want you near us, right?
Yeah.
Is that?
I thought it was because I'm hiding from the law.
Well,
there you
maybe
go.
that's it. I don't know, but yeah. So
Everybody's got their own reasons, right?
Yeah, so if you're wondering, she is in studio. She is right here with us. We're looking at her and we're talking to her, but she's not on camera. So Steve wanted me to explain that.
I guess where we could start with this is with your first rental is always the first one. What got you into building a rental portfolio? Because the first one is always the best story, right?
It is. Yeah. I think you kind of stumble into it sometimes.
Mm-hmm.
Yeah. So my sister-in-law called me one night and said, guess what? Your brother hasn't made a house payment in over 3 months. And I don't know what we're going to do. What do we do? And because I was doing mortgages, I guess she thought I could straighten something out for them. I'm like, do you have the money to catch it up? And she said, no. I said, well, I mean, there's nothing you can do. So I said, well, you're going to have to sell the house or they're going to take it. And I said, how much do you think y'all would want for it? And she said, I think we could probably get what we paid for it. Well, my mom was a real estate agent before that, and I knew that was a HUD home.
Mm-hmm.
And so I was like, but y'all paid like $50,000 for it. And she said, yeah, no, I think we could probably still get that. And in my head, I knew it was worth close to $100,000. And this was, 25 years ago. And so I was like, and it needed work.
Mm-hmm.
And I said, well, I guess I'll just buy it then. Because I knew in my head, like, that would be dumb to let something like that go. So I was like, okay, how am I going to figure this out? I was 24 probably at the time. Maybe no, I might have been 25 or something. But,
wow, that's
and
awesome.
I was single with my daughter was a baby. I'm like, how am I going to do this? I already had my own house.
Mm-hmm.
So you owned the home you were living in?
Yeah.
Okay.
Yeah. So I'm like, how am I going to figure this out? Of course, my mortgage background helps a little bit.
This is the fun stuff right here.
Yeah.
How'd you do it?
I moved into their house and I rented my house that I owned. So that was a lot of work, but
Yeah.
it was the only way I could even kind of afford a rental property at that time. My plan was really to not stay there because I didn't really like the house that much. But while I was there, I fixed it up. I worked on painting stuff and doing floors and doing things that I could do by myself. And then in the meantime, I had told one of my neighbors from my house that I owned, I was like, if you see anything come up for sale or hear of anything around here, let me know. I want to come back. And 6 months later, she said, guess what? One of the neighbors down the street is losing their house. Do you want to talk to them? I told them you might want to talk to them. And I said, yeah. So, yeah. They were losing their house. They had an assumable mortgage, which was amazing.
Nice.
So I ended up giving them some cash, and then I assumed their mortgage. Yeah. Yeah, that was awesome.
So back then, that was a lot more common, right? So there was a lot of investors that were. Well, there was a lot of investors that were chasing foreclosures on the foreclosure list, right? Now you were doing basically the same thing, but you were through word of mouth.
Through word
right?
of mouth, yeah.
Instead of chasing it, so to speak. So I got you. So let's back up a little bit because we jumped right into her story, and I love it. I want to hear more about it. But Kyle, this is one of the more fun things that we do on this podcast is being able to hear the stories of everyday people that are just like you and me and everybody else that might be listening, and how they accomplished what they were accomplished. One of my favorite podcasts we ever did was with clients of ours, Kevin and January Seaton, and they've grown we call it their empire. Just two everyday normal people that have grown their empire to like 100 doors or something, right? So the point is, we want to be able to show through your story and through stories like that how anybody can do this if you just take some action.
Mm-hmm.
Not everybody knows what action to take, and not everybody's inspired or they're fear-based. They make fear-based decisions.
They're lacking confidence.
Confidence, and you had some of the tools that helped you give you that confidence, right?
Oh, I was very nervous.
Yeah.
I was very nervous.
Yeah.
But I tell people all the time, they come to me for help, like, how do I get this going? And I tell them, but most people won't do it because they don't believe in themselves or they don't think they can actually do it. You have to, for me, it was like, I have to trust myself.
Yeah.
I put it on paper. I work out the numbers. I do it 2-3 times. I'm like, how does this make sense? Like, do I not trust myself enough to just do this? Like, what would be wrong with it?
Well, we talk a lot about on this podcast about how knowledge and experience can help overcome that fear, right?
Mm-hmm.
And that's what you're talking about is while you had the fear still, you had the knowledge to know. And that's why we talk about things like...
I don't know if that's... I would fully say that.
No?
Back in my early 20s, I mean, I'd been in the mortgage business a couple years, but no, I didn't have the knowledge. I never thought I'd have rental properties. That was never even on my mind. It just fell in my lap.
Well, there you go.
And like I said, I just had to trust myself that this makes sense. If I don't do it, I'm kind of a dummy.
So I want to go back to something that I don't know if I missed it or if you didn't explain. It's something I'm curious about, because I'm thinking, I'm always in the head of somebody who's listening. It's like, yeah, that happened to me and I didn't know what to do, right? The first house, you owned your own home already.
Yeah.
You lived in, right? That's first step I always tell people is to own the home you live in, right? Like, let's get past that stage, right? And then start thinking about our first rental. So you get this opportunity from your sister-in-law. So if family calls you, they think that you might be able to help. Do you mind sharing, and this may be too personal of a question, so don't be afraid to tell me if it is. How did you manage to acquire that home? Like what tools did you use to actually acquire the home?
That's a good, and this is advice I give people all the time now, is I had to move into the property so I could buy it as an owner-occupied property, because there's no way I could afford a rental property. To do a mortgage, you'd have to have 20% down to buy it as an investor. So I chose to rent my own house out and then move to there so that I could do minimum down payment.
We talk about that a lot, don't we?
Talk about it all the time.
So you were able to get then like a 3.5% FHA loan type of thing? Is that what you did?
Yeah, I don't remember.
5%
maybe it might have been a
something
conventional.
like that. Yeah. I love it. That's really smart.
And that's why I actually, my first probably 4 or 5, I moved into owner-occupied. Because that's the only way you can start out with hardly anything. And
that's
I mean,
what
not
we
that you
talk
could have
about a lot,
nothing,
is the combination of these tools and using that method of a BRRRR strategy, because you can leverage financing easier when it's primary residence. I mean, you do mortgages, you know how they're worlds away from investment property and primary residence financing.
Right. Exactly.
And getting your money back out for renovations. All those things are hard to do without it being your primary residence.
Yeah.
So.
And I did a lot of the work myself. And it's a lot of work to move, but if you have that kind of motivation to build yourself wealth, then that's, it's work.
100%. I always said I had a cousin that was about your age, that age, the age you were when you started doing this. It used to do that, like move into a home, renovate it. They'd live in it for about a year and just take their time to renovate it, right? Like, you're paying rent somewhere anyways. So you might as well pay rent in your own home while you're renovating it. And then he'd sell it and move on and buy another home, right?
That was my original plan.
Yeah.
Actually, that was my plan. I was just going to move in there and then sell it and make the money. But once you get in there and for me, I would get in, I put my personal touches on it, paint the color I like, the floors I like. I didn't try to put $1 million into it, but I felt pride in what I had done. And so it was hard to let it go. So I'm like, maybe I'll just rent it for a while because I'm not ready to let it go yet. That's how come I ended up collecting properties.
How much
this
time
goes into the should we sell or should we rent conversation we have all the time.
We talk about that all the time. And what's the answer?
You should rent.
You should rent. And whenever you can, you should rent. There's reasons why you shouldn't, but for the most part, we are an opinion that you should rent.
I agree with that. It's definitely done well for me over the years.
Good. So now I'm curious so I'm trying to take this one step at a time so somebody could really follow your journey, right? So now you've acquired this, you've moved into it, you've acquired it, and you're renovating it. I don't know, or maybe you're renovating it or putting your own touches on it. How much time went by between that and your second opportunity?
My third home,
Yeah.
6 months.
Wow. Okay.
You
Yeah.
were
So
inspired at that point.
Well, no,
right?
my neighbor called and said people down the street from my first home, they were losing it.
Okay.
And so she was like, I told them about you and you want to come talk to them. And I said, yeah.
So
So I
you-
ended up getting that house and
you're doing a
moving
good
back to
job
my
at-
old neighborhood.
You're doing a good job at networking.
Yes.
Your neighbors know who you are.
Mhm.
They know what you do, right?
Yep.
Like, so you're not afraid to remind your family what you do so they know who to call, right? So
Yeah.
far, like some of the principles here, Kyle, we talk about this with our Orange Beach opportunities, right? Like some of the principles here are just being present and making sure people know who you are and what you do at all times,
Yeah.
right? In every aspect of our life.
Yeah, and
It's called networking.
You bring up a product that we've done whole episodes on, talked to people about. So this makes it real for our listeners is the assumable loan, right? So they're about to get foreclosed on, so it goes to thinking they're behind on it, and I could go into explaining how that works, but that's what you do. So do you want to tell us how that taking over of that product can help you save money and acquire this property?
There's probably not really any more non-qualifying assumables because they stopped doing those type of loans in 1987 or 6, something like that. So 30 years have gone by. So those loans are done. So me running into that one was a miracle. I actually have run into 2 of those. And the second one, they only had 7 years left on their note. So I was able to pay that off in less than 7 years.
Wow, that's great.
Yeah,
And
but I mean, the chances of running into that nowadays.
Yeah, but if you know about it, you take advantage. You can claim the opportunity.
But
yeah,
the chance of there being a 30-year, more than 30 years going by since that assumable was an option, I mean, it's probably been 50 years. So those are probably not very. Now there are some assumables, but you might have to qualify for them.
Yeah. There's certain types. We talked to Trevor about how there's certain types of assumables now, but they're not like the old.
No,
products
the old one is
Yeah.
you didn't even have to qualify. You could just send in the paperwork and say, okay, give the mortgage
and
to
catch
that
up their
person.
payment essentially, and you're good to go, and you
Yeah.
own the house.
Yeah,
So.
that was a non-qualifying.
That's
assumable.
amazing. We talk about subject twos and how, technically, there's a acceleration clause that the mortgage companies have for that, so that you can't do that, and that's basically what they were doing, right? With these non-qualifying, it's almost the same thing as a subject to, where they're just letting you take it over, right? They don't know who you are, they don't know what you do, they don't know how well you qualify, right? They just
Without the risks of a subject
Right.
to.
You mean the mortgage company?
yeah.
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 That's what they used to do.
Yeah. Without all the risks we've talked about of subject to. So,
Right.
it's best of both worlds, which is probably why they don't have that product anymore.
Right, exactly.
So-
Yeah.
All right, so now you've got 3. You got 3 properties. You've had 2 that just come to you through networking and through your sphere, right? Tell us more. How does that journey continue?
Well, what'd you do with the third one? I guess you moved into it, right?
I moved into
You
it.
did the same thing again?
Yeah.
You fixed it up, and all right, then what's the next step?
You just starting to get the bug at this point? I
Yeah.
mean, you have a couple tenants. You know what it's like to have tenants, right? You're managing them yourself,
Yeah.
right? You're putting the leases together, and you're taking the phone calls for maintenance and all that stuff that people, quote unquote, talk about, hating. The people like to talk about tenants and toilets, right? And how
Yeah.
bad they are. So you've got 2 of them now. How bad is it?
At that time, I don't even remember, but I don't remember it being that bad, actually.
Okay, good.
Yeah.
Good.
I mean,
so we're having a good
again,
experience
I think
so far.
some of it is just your own, how you are personally. Some
Yep.
people, you know what, if I can buy it here at the store right next door for $1,000, but if I go 4 blocks down the street, I can get it for $800. I know people that are like, well, I'll just pay the $1,000 because it's right here. It's easy. I would never do that. I would go out of my way to save a little money. So I don't know where I'm going with this exactly, but the repairs or people calling for repairs, just get it done.
Get it done.
It's not that hard.
You kind of bring up something we talk about with rent prices, right? People say their taxes and their mortgage goes up, and now you need to increase the rents. I'm like, well, the market makes the rents. So if you push it over market, then they're going to go find something cheaper somewhere else, right?
Yeah.
It's probably what you were maybe what you were getting at, but the same
Yeah.
goes for repairs too.
I think I was going more
Yeah.
for like somebody's personality. I think
Okay.
is where I was going.
Yeah.
Are you okay to put the work in,
Yeah.
or are
Yeah.
you too, not to be mean, but too lazy to want to put the work in? You'd rather just live your life and
Right.
paycheck to paycheck, and that's easier. It's definitely easier.
Well, yeah. I mean, no
It's-
one's going to tell you building wealth comes easy.
Oh,
you
no.
know, if
No,
they
it's-
are, they're lying to you.
It's been a lot of work. Yes.
Yeah, definitely. So, I feel like your journey changes as you get to where you're at, right? So, how'd you do the next few? Were they all the same kind of?
The next
Move
one
in and live in 'em,
again
or-
was networking. There was a house in the cul-de-sac where my mother lived,
Okay.
and of course I had my daughter, so I ended up buying that house just because it was next door to my mom.
Okay.
So that's
You mentioned you were a single mom. How many kids do you have?
I have two.
2 kids. Okay. And you're still a single mom. You were a single mom then,
Yeah.
and you're still okay. Good.
Yeah.
Okay,
I mean,
good,
there's
good.
been things in between, but
Right.
yeah.
Right. Okay.
So, did you change to the conventional financing part to purchase this one next to your mom?
Yeah. You can
Yeah.
only have one FHA loan
Yeah.
at a time. So
Yeah.
yeah.
And did the other properties help you build up the money to purchase the fourth one?
Yes. And again, back to my mortgage background, if you rent a property for, let me back this up. The mortgage company will give you credit for 75% of what you lease it for.
Mm-hmm.
So if you lease it for $1,000, they'll say, okay, well, we'll give you credit for a $750 to offset your mortgage payment.
Yep.
So that now you can qualify for something else. So if you rent it for $1,000 and your payment's $750, that's a zero debt. So now that doesn't affect you from qualifying for more house. Does that make sense at all?
Yeah, we talk about that a lot as well.
We talk
So,
about that all the time. It's good to have a mortgage person say it independently without us coaxing her into it.
Yeah.
So
I mean-
that's another reason why I would move into the properties, because I could, I could qualify for another loan because I had the properties rented. So it was like I didn't even have those mortgages.
Yep.
Yeah.
Yeah, we talk about that a lot because people, it's a common question. It's like, well, 10 houses, how am I going to qualify for 10 mortgages? Well, when you piece them one by one, you basically rent it out and get rid of that piece of your qualification.
Right.
Shanda, how many do you have total? Do you mind sharing that with us?
I am actually not sure.
If you're not sure. Well,
That's a good answer.
I know of, can I share what I know of?
Sure, yeah.
I know that you have at least 11. I want to say 12, actually. I found another one that you didn't give me, but
Oh.
but I don't know. You might live in one of them, so I don't know. So my question is, have you, through all of these, have you been doing this every single time? You've been moving into it?
Oh, no. Once I moved next door to my mother, she was my built-in babysitter.
Okay.
So
That's where you stayed.
We stayed there. I mean,
Love it.
We moved in with the next for a while and stuff like that. But at that point when she started school, I was like, okay, we're set. This is your school. I don't want to move you from school to school to school. So, yeah.
So one of the things I'm sitting here thinking about what people typically are fearful of about doing this, right? Especially at this stage. So I'm thinking about you as a single mom with a couple kids. If you did mortgages at that time, you're probably doing pretty well, right? The market was decent then and was kind of going up from there, right? From that point. So if you were learning the business and you were networking well and doing well, you were probably doing pretty well. So I'm thinking about people and their finances, right? How am I going to... So we've talked about how you're acquiring them. I love that because that gives people some insight on how you can actually acquire these homes. Mm-hmm. But now after you've acquired them, I think one of the fears people have is, okay, I got to pay the taxes and the insurance and if my tenant moves out, right? Like I'm going to have it vacant. No one's paying me rent. And what if the water heater goes and all these things, right? You just all these things go through your mind and they make home ownership more of a negative than a positive, right? Because they're only thinking of the negatives. So I guess what I'm asking you is I'm wondering how you overcame that, for one, those natural fears. And two, what tools did you put any financial tools in place to help you through that during that time of your life?
I made sure I had money saved.
Okay.
That was important.
All right.
I had good credit, so I knew if a disaster happened, I could always borrow or put it on a credit card or something at worst case. But I always tried to make sure I had reserve for emergencies.
Like a separate account.
Yeah.
Right?
Plus, my rental properties actually made money.
Yeah.
So not only did they pay my mortgage, they also made money. So maybe I made, I don't know, as a guess, let's just say I made $1,000 a month off rentals. That would go into my rental property account. And it would, that's there for that reason. I mean, I could spend it if I wanted to, but it was building up. We'll just put it that way.
Yeah, you say that as such a matter-of-fact thing, but this is what we coach all the time is like, if you treat it that way, it doesn't feel like hits to your personal income all the time.
Right, it's a business.
Because it is a business. You keep it as a separated business. Now you have 12 properties, for example, making thousands a month, then, it builds up a lot quicker.
So I assume you still have a separate account, right? Yes, no, maybe. Okay. Well, personal questions. I'm asking personal questions for a reason, so you don't have to.
You know what? It's weird. It's like it's just secondhand now.
I got you.
Everything's easy going now.
Yep,
so.
I got it.
But when it's all tight, when small things going wrong can cause big problems, is there at the beginning, right? So that's why it's important to put these fail safes in place.
Yeah.
So
yeah, this is how I got to where I am now.
Yeah.
Now it's I don't know. I've bought houses where I've just kind of walked through and been like, okay, I'll take it. And people are like, are you crazy? But I've done this so much.
Yeah.
It's just.
that's actually great.
It becomes, what do they call it? Old hat, right?
Yeah.
When you've done it a few times, we've talked about that, how these decisions and these fears that people have that stop them from taking action, they go away once you've done it. Once you've been down that road, they go away. And so it's easier to make the decisions, good or bad, right? You don't fear the repercussions of a bad decision as much because you've been through it and you know that you can get through that and you can handle it and still win on the other side.
Yeah. I feel like if you put it on paper and it makes sense, you just have to trust that what you're doing, that you trust yourself.
Yeah.
If you tell yourself like, oh, I can't do it, or it's going to be, that's what's going to happen. You have to trust yourself that what you've figured out or what makes sense to you makes sense.
I love it.
And that you can do it.
Is it fair to say that the cash flows from the rentals over the years helped you acquire more rentals?
Oh, yeah, of course, yeah.
And over time that compounds into getting easier, right?
Yeah. And, once I had, 4 or 5, I thought, oh, wow, if I just keep this going, let's see, by the time I'm 45, I can have 3 of these paid off or whatever.
Yeah.
And then I can retire when I'm 50, or whatever. I would think about that all the time. So just moving toward that. Yeah.
Brings up another thing we say. Do you appreciate your appreciation?
Oh, I love it.
We talk a lot about how investors like to negate that factor of building a rental portfolio. It's all about cash flow, right? Well, you were just talking about your first home being a $100,000 house that you bought for $50,000. Do you still own that house?
Yeah, I do.
You still own that house? Okay, so
worth, up to close to $300,000 now. Yeah.
And where's it out? It's like, John, can you go find me a $100,000 house today?
No, I can't.
I didn't even give you a location.
No, can't find you a $50,000 house either.
Exactly. I've bought plenty of $50,000 houses too, and sold them a few years later for double that. Yeah.
Well, and I mean, the way the world goes, the way these markets go, right? In 10, 15 years, we could be talking about how crazy the $350,000 house is, right? So, and gets into why.
I mean, that's your starter home now.
Yeah. Yeah. And starter homes could be $1 million in 20 years for all we know.
So Kyle, we've talked a lot about this method that she's using, and she's really kind of used it to the extreme. I mean, at least for the first 4 or 5 houses, right? And then flipping that kind of into a BRRRR method. You know what the BRRRR method is, right? You've heard that term. We use it a lot. Buy, rehab, rent, refinance, repeat. Right? You heard that?
I have heard that.
So are you using that method? And you said after you landed next to your mom, you stopped moving into them. So I assume your methods changed a little bit.
That reminds me. I did refinance a house. I cashed out of it, took my equity out, but kept the house. Mm-hmm. And that I was able to purchase my 5th one. Was one of my clients trying to sell her house. She kept sending buyers to me. It was actually her sister's house. I think her sister's husband had gone to jail and she couldn't afford the house. And so she was like, I'm going to put a sign out there and I'm going to send the clients to you. Please get them. I couldn't get anybody approved. So after probably about 8 months, she was like, I don't know. I guess I'm just going to let this go. I just can't deal with this anymore. And she's like, and then my sister put $10,000 into the bathroom and the kitchen just like a couple months ago. And she's like, I could just kill her because we're losing the house. And I said, oh, well, wait a minute. Where is the house? And she said, would you be, you know what? She had said an investor had come to her and offered her something. And she was just going to let it go that way. And I was like, well, where is it? And so she told me where it was. She said, do you want to come look at it? I was like, yeah, I'll come look at it. Sure enough. Yeah, it was nice. I didn't have to do much to it at all. And it was an assumable. That's the one that had 7 years left on it.
Wow.
That's awesome.
That was nice.
Wow.
Taking advantage of deals when they fall in your lap too is a huge part of an investor's journey sometimes too. You know?
Yeah, a lot of them have just fallen into my lap.
And if you don't, raise an eyebrow at those situations, and you're like, this could be a good deal for me, because at the end of the day, you're still helping somebody out, even though you're coming
they
out
were
looking
appreciative
nice.
because
So,
I gave them more than the investor would have given them.
yeah.
So. I gave them some cash, and then I assumed the rest of their mortgage.
The rest of the loan. Yeah. Which is what kind of like the subject to situations we're seeing nowadays. So, but in these markets, that happens a lot. So, what about your most? Because as this journey goes on, I see that the tools and products that investors use become more conventional, possibly because they have more, you have more resources to do it. Your most recent rental acquisition, how did you acquire that one?
I don't remember. It was listed.
See, it's just becoming old hat now, right?
I
We don't even
know.
remember anymore. It's like, it's great. It's like we just got money coming in and things happening, and this is great.
Well,
This
you said you've been flipping them, right? And that's kind
Lately,
of where
I've been flipping them, yeah.
that's where the BRRRR strategy comes in. And I love having someone in the mortgage industry explain why we put the rent before the refinance, because that's a big question people ask about the BRRRR strategy. Why do you rent it before you refinance it? It doesn't make sense. And it's like you said, it's to qualify for that refinance by renting it.
Yeah.
So, and the flip part is the rehab, right? It's just a matter of how much rehab you need to put into it. So,
Yeah.
Are you using hard money products to do your
I
flips?
have used them before, yeah.
See, she's using all these things we talk about. It's real. People do build portfolios this way. So it's not just me and John telling you this.
Yeah, because not that many people have enough cash to just pay cash for a house.
Yeah.
And sometimes they don't meet financing requirements, so you have to use, hard money or
people
something.
get caught up in like the cost of hard money, right? Sometimes stops people, and people get caught up in those things. People get caught up in short-sighted type of decisions, like the cost of hard money or the amount of cash flow they're going to make or whatever, right? And forget to look at the big picture. Like, if you hadn't acquired some of these homes, right, in the past, regardless of how much it cost you at the time to acquire them or how much you made at the time, you wouldn't now be making X amount of dollars per month, and you wouldn't have X amount of dollars in equity, right? Like, you have a ton of equity in each one of these homes and you're making a ton of cash flow. That may not have always been true. Like, when you started, you may have put a lot of money out, right? You may not have had as much money per month. And I know every house has its own story and it's probably a little different, but the point being, it sounds like you're taking a long picture view of it all instead of being really short-sighted in making those decisions, right?
Sure, yeah.
She's just going to agree with me.
Well, you did answer all of it for her,
I
so
did,
I mean,
kind
why not?
I did kind of.
What he
Yep.
said.
Yeah, what he said. So, and in my question in appreciating the appreciation, like, I'm not going to ask you for the number, but people fail to realize that even 12 houses can increase over time your net worth into a lot, right? You know, millionaires are made off 10 houses sometimes, and it is real. It does happen. So, I want to give you the opportunity, Shanda, to talk about what you do. You know, you told you were with Service First Mortgage. What does Service First Mortgage and Shanda Pigg provide to consumers?
Mortgage loans.
Mortgage loans.
So I assume people that are listening that are thinking about getting into investing, you could help them. You could help consult with them and teach them, right?
Right.
Coach them how to get started, how to become qualified for their first mortgage for the home they live in first, right?
Yeah.
And then secondly, maybe even how to buy their first rental property, right? Whether it's doing it the way you did it or if it's a more conventional way of, saving 20% and putting 20 or 25% down, right?
Yeah, and there are some cases where you can do 15% down.
Yeah.
Huh.
It's not as common, but it could happen.
Well, and we talk a lot about creative financing and all these different tools that can go into an investor's journey to make it possible, right? What scenario are you in? What tools can you leverage to get this done? Sounds like you've used most of them, if not all of them, but most conventional mortgage lenders don't know about all that stuff. I'm not going to...
Right, they don't have rental properties, so they're just they're just doing the loan. They can't give you advice on everything else.
Yeah, if it's not FHA or conventional, they don't know what it is, right?
Right. I have clients that, over the years I've helped them get rental properties and things, and they'll still call me back and say, hey, they're not paying the rent or whatever. What do I do? And I tell them like, okay, well, you have to do this. And so they still call me and ask questions, and that's my favorite subject, just to talk about real estate.
I love it. Can you speak to the current market? So meaning one of the things that stops people currently is cash flow, right? Interest rates are really high right now. And so when I'm looking at buying a house with the prices as they've gone up, even though they've slid back a little bit, they haven't slid back enough to really offset the interest rate increase. So when you're looking at buying a house, like the type of house that you're talking about that you bought for $50,000 now is $300,000. So if I want to buy a $300,000 house that was built in 1978, right? What's my interest rate going to be? How am I going to cash flow? Like, how are you helping people that actually want to invest do that right now in our current climate?
What do you mean, like as far as... I'm not sure I follow.
Well, I guess I'm asking if you have any special products or if you have any special consultation for people. So one thing that I've heard a lot of real estate agents like to say is, marry the house, date the rate, right? That's the most recent, catchphrase that real estate agents are using to try to entice people to not be so caught up in what the rate is, because that can change and you can refinance out of that rate when,
I tell people
things go down.
All the time, if rates are 7% today and you don't buy, then in a year from now they're at 8%. You're going to be like, dang it, why didn't I buy at 7?
Right.
Instead of being like, 7's too high, I'm not going to do that. So, it is what it is today. Either rates are going to get better. That's what the rumor is. If they get better, you refinance it. If they get worse, you're so glad you got 7,
right?
Because everybody else is at 9 now,
right?
And no matter what the case, you're better to own than to give the money to somebody like me.
But if you wait a year or two and your house is now $100,000 more for at 6%, does it cost you less? No, it's costing you more because of the home price.
Right.
So,
yeah. And as far as rental properties go, the renter's paying for all that stuff.
Yeah.
They're paying the interest rate, they're paying the taxes, they're paying the insurance, and I'm getting all the write-off. I can take all of that off my taxes. So it's win-win. They pay for it. So if at the rate's 7%, okay, that's more write-off for me.
Have you ever, this is a good question in this market, have you ever bought one of these rentals and analyzed it at a net zero cash flow or even a negative cash flow, knowing that your cash flow is either very slim or none?
Me personally, no.
Okay.
I would always want to cash flow.
Yeah.
Otherwise, to me, it doesn't really... and I guess every scenario is different. There might be a case where it does make sense. And I have a lot of investors that don't care about the cash flow, like from California, that kind of stuff. They know that the appreciation is going to be there.
Yeah.
So for me, I like to have both things.
Yeah.
I want something that has a little bit of built-in equity, or I know it's going to appreciate really quickly, and have some cash flow.
So is that the reason why you're flipping and not keeping some of these? Because you're concerned about not getting the cash flow?
Well, we ask because we talked last week about the different investor strategies that you can take. That is like, you can have the one that you've done with success. Like you said, your investors in California that can see that their strategy is based on appreciation, and all these things can work in tandem. So that's why I asked. I wasn't saying you needed to be one or the other. It's just interesting to hear what the different strategies are.
Yeah.
So, and would you say that your investment strategy has succeeded and the way you've done it has succeeded?
I've never lost. I'm going to knock on something, but yeah, I've never, even on flips, I've had one where I made like $1,500 profit, but that's still a win.
I've done that. Yep.
And sometimes you learn a lot from those.
Yep.
So as long as you don't lose money, you're winning.
Anyone who's ever flipped or flipped consistently knows that if you don't lose money on a flip, then you can't consider it a loss. So.
Yeah, and there's a lot to be taught on flips too. People make a lot of mistakes.
Oh yeah,
and they, family member. I have my daughter's in-laws were like, we've always wanted to flip a property. Can you? I was like, I'll totally help you. So they found a property. Then they hired a designer contractor, a lady. She came in and said, "Oh, we're going to do this and do these new floors." And I was like, "No. No. You don't put everything that you want in your own house in this. You put enough that it looks nice and it's good enough, and you find flooring on sale, and you do this yourself. Whatever. Every penny that you're paying her is penny you're not making."
Mm-hmm.
So. But they didn't listen. And so they got really scared and they sold. And, when we went over there last time, they were like, if we would have just held on to it, not panicked, we could have made, $70,000 now. So if only someone had mentioned that to you.
Well, I've actually we did an episode called Those Flipping Costs, and I've sent it to quite a few people it's opened some eyes, because it's like, people think $250,000 property you could sell for $300,000, and they're saying it's $30,000 in repairs. Does that sound like a good deal to an experienced investor? No, because it's not just
they think
expenses,
it's
right?
$250. I can sell it for $300. I'm gonna make $50,000.
Yeah, no, there's costs that add up, and I think at the end of ours we had a spreadsheet of probably 18 different things people don't think about. And I guarantee you designer wasn't on there.
No,
so
for sure.
It wasn't even a consideration.
So
it's
the house was beautiful.
Not a necessary cost.
It sold really fast and it was beautiful, but their profit margin was very small.
Yeah.
I think they still made like 8 or 10,000, but they could have made a lot more than that.
Remember the episode that we did, how you could do this badly and still win?
Yeah, exactly. Well, in the dark side of flipping, right? It's if you haven't came to a closing table with cash as a seller, then you've done okay, right? Yeah. Or you haven't. That's the biggest discouragement in flipping, right? When you have to pay to sell your house.
Yeah.
So
again, to me, that's more, put it all on paper.
Yeah.
You can't, I don't know. And then trust yourself.
Yeah.
You just have to trust yourself.
That's probably the best advice we try to give, but coming from someone who's done it, right? Mm-hmm. We've done it too, but Yeah,
because I could have easily been like, oh, that's too scary. I'm a single mom. I'm 25 years old. I wasn't making that much money. So, super scary.
How old are your kids now?
My daughter is 25.
Okay.
And I have a 10-year-old son.
Wow. Okay. So, what is what is your oldest daughter like? She's watched you go through this journey.
Yes, she's helped me. She knows how to put floors in. She knows how to do drywall, painting.
Okay.
But she won't touch it now. She's like, I'm over it.
She's like seen everything you've done, and she's scared. She doesn't want to go through the things you've gone through. It's like the wealth building you've created doesn't inspire her to try to do it herself.
No, I mean, she brings it up once in a while, like, hey, let's flip something together. Which she means like you find it,
you do it,
you use all your resources, and then we split the money at the end. She's in the medical field. She didn't want to go into this.
Let me ask you something that we don't get to talk about very much, but because it's not like. It's not an advice piece, but we talk about all this fear and the things that may stop people. After doing it and having success in it, do you find any joy or fun when, one doing it all and planning it all, but when that flip works out and then the rental works out, how does that, on the back end of it, how do you feel about it?
I feel good.
Yeah.
Yeah. I'm proud of them.
No regrets.
Oh gosh, no. There's nothing to regret.
Love it. That's kind of why we brought you here, Shanda, was to tell your story, to paint the picture of how you got where you are, because you didn't get here overnight, right? So somebody didn't just put 12 houses in your lap and say, go.
Mm-hmm. No, and I didn't have
make
help.
a bunch of money, right?
No.
You were on your hands and knees putting floors in. You were painting walls. You were doing it one house at a time over the course of, it sounds like 25, 30 years, right? And so that's a real picture, right? That's how it really works. Mm-hmm. Sometimes people can do it a little faster. Sometimes they do it slower for whatever reason. But gosh, there's not too high of a percentage of the population, especially single moms, that have 12 houses. right? I mean, I bet you that.
Or don't know any houses.
I bet you
they
that
have, I should
percentage
say.
is pretty low, right? I don't know. What do you know? What the percentage of people is that even have a rental property?
I don't know.
I wonder what that is.
That
Do we know?
many.
Why don't we know that answer? We should
People
know
or
that.
entities?
People are too scared.
People.
I think
Yeah.
people are scared and they don't trust themselves.
Yeah.
I had one of my clients recently said that she was going to get a divorce and that they were going to sell their house. And I said, okay, well, so you want to get qualified to buy another house? And she said, no, I think I'm just going to rent after this because, it's just a lot to deal. I forget what her reasoning was, but I'm like, because when she retires or something, or she wants to retire at some point. I said, okay, but when you retire, you're still going to keep renting versus if. Oh. So I'm like,
Steve's being the producer over there, being a good producer and sharing information with us. I love it. So 6% of the population owns a rental. So,
oh wow,
I bet you a small percentage of those people own 12 rentals. Though is my point, right?
Mm-hmm.
Like so, I bet you a high percentage of that 6% is either institutional buyers, like you said, or they own one home, right?
Mm-hmm. Yeah,
So,
I would say, yeah, that makes sense.
Anyways,
But anyway, so if you retire and you're renting, you have to rent until you die, basically. I'm like, but if you buy a house now and when you retire, you may have a house paid off. Like, how does that make sense? If you don't buy, you're going to guarantee yourself to rent for the rest of your life. And she was like, I had never thought of that. So.
Well, and I had this conversation this week with someone who's a lot younger than me, but I made the simple comment of like, you can shoot it down, but you can retire off 10 houses. And they're like, how? That doesn't make any sense. And I'm like, okay, well, you're 20 years old. And in 30 years, if you got, in a perfect world, say you got 10 houses today, but let's just ignore that. Say when you're 30, you got 10 houses, right? You spend 20 to 30 getting 10 houses on 30-year mortgages, and 30 years they're paid off. So when you're 60, they're all paid off. Well, what's the rents on those? You're making two grand a month, 2,500 a month, whatever it is.
Times
that by 10. Can you live off 10, 12 grand a month? What do you live off now? You could even be, I use the example of you could be more wealthy at retirement than you were pre-retirement, because if you live off 5-6 grand a month, a lot of people do, that's not that bad. And then you retire living off 10 grand a month, that sounds pretty good.
And if you take a long-term view of it like that, and it's like Shanda's doing and like I do, we look at it as our retirement plan, right? Then you can even do a 15-year, right, and pay those off quicker, right? If you're older, if you're not 20 and now you're 40 and you're starting this, when
interest rates are zero, that's a good time to do that. But the last question he asked me was, well, what if I want to retire and have a nest egg of money too to go do stuff? And I'm like, okay, sell one of them. Now you have $9,000 a month in
but
cash
over the
flow.
last 30 years you've had these, you're going to have a nest egg.
Yeah.
If you don't have a nest egg, I don't know what you're doing.
Yeah, and this is this is a conservative example. The numbers are probably better than this. You a few of those 30-year mortgages rolled off before you were 60, a whole bunch of things, but sell one of them for $500,000 or whatever it's worth, keep the other 9, and now you got your cash flow and your nest egg. So
yeah, and I've bought and sold. I've sold some of my rentals and stuff over the years to help me leverage to get 2 more out of that, or, whatever. So yeah, over the years I have sold several of my rental properties.
Yeah, and
then I'll pick up another one, or whenever they fall into your lap.
And we've admitted we've done the same thing. You make a decision on every one. Sometimes you decide to flip it for certain reasons and sell it, or
yeah. If you know one, like I had one recently that was built in like 1960, and people were fighting over it. I turned it into really nice. But for me, 1960, if I keep that for 10 years, probably going to run into some problems.
Yeah.
So probably not want to keep that one.
Yeah. And I mean, we at the end of the day, if nobody did this is something a lot of people don't think about, but if nobody did these houses would just be sitting and getting deteriorated, and there'd just be less houses and rent rates would go up. So everybody loves to blame landlords and investors and stuff. But if there weren't any investors and landlords, you'd just have houses that go to crap and less houses available out there.
Yep.
So it does help the rent problem, even if it's only by 6%. 6% compounds pretty quickly. So. Well, it was definitely a pleasure having you in and hearing your journey, Shanda. I thank you for coming.
How do people reach you?
817-360-0996, or you can go on my website, shandapigg.com.
Two G's.
With
Two G's, yeah, double gur.
Double gur, I like it.
Double gur, I love it. You definitely have an extremely memorable and unique name, right? Shanda Pigg,
Yes.
and with Service First Mortgage. Sounds like she is somebody that you could call if you are thinking about buying for your primary residence, right?
Mm-hmm.
And or investment property. It sounds like she could coach you through that process and get you through that. Shanda and I, we recently reconnected. So we met originally on the soccer field, right?
Yep.
We played indoor soccer together and reconnected in the courthouse, right? Doing an eviction. We were both doing an eviction and reconnected right there. So thanks for doing this for us, Shanda. I appreciate it very much. Kyle and I, this is what we love doing the most, right? We love sharing with people, encouraging people, and inspiring people. And it's so much easier to do out of the mouth of somebody else with a story. Everyone's probably tired of hearing Kyle and I's story, but to hear a new, unique story is really refreshing, and we appreciate it very much.
Thank you.
Close us out, Kyle.
Yeah, if you guys want to hear anything about any journeys or connect with Shanda, if you missed that information, we are happy to pass it along. Give us a call, 817-818-9039. Shoot us an email at showmethemoney@weartpm.com. Thanks for tuning in, and we are out.